Before you've bought a house, you will have already discussed indicative home loan repayments with your mortgage advisor based on your home loan approval amount, so that you have a good idea of what this might be when you go ahead and actually buy the property. After you have unconditionally purchased the property, we now know exactly how much lending you need from the bank, so we have hard numbers to work with to figure out what these repayments will exactly look like. It's common to have a settlement period of approximately 3 to 4 weeks. A settlement period is the time between when you go unconditional and you pay your deposit and the actual settlement date. However, sometimes it can be longer, say up to 3 months, and in some cases it can be much shorter, say as little as 2 weeks. So we usually have a loan structure meeting after you go unconditional and prior to the settlement date. Ideally we have this as soon as you go unconditional, so we can get organised and get the paperwork ordered from the bank well in advance of when it needs to be done. During this loan structure meeting, we'll go through all the details that we need to be able to order the loan documents and make sure that you understand what to expect from that point in time right through until settlement date. This includes deciding on which products are going to be most suitable for you. So we'll talk about fixed or floating rates. We'll go through whether a revolving credit or an offset product might be suitable for you, and try and figure out what is important to you. Is it paying down this loan as fast as possible? And what are the options we've got to enable this so that you can try and clear that mortgage and get that debt down as fast as you possibly can. Most first home buyers will fix their interest rate. And so what we'll do is we'll go through your total lending amount and decide whether we want to split that into more than one loan, and even potentially factor in a revolving credit or an offset as well. And if you are looking at fixed interest rates, is it a matter of fixing it all on the same term or splitting it across different fixed terms? You might want to do some on 12 months and some on 24 months, or a bunch of different scenarios we can go through depending on your risk appetite and our view of what interest rates are doing in the near future. We'll also cover off cashbacks as discussed in a previous video. We'll go through repayment frequencies, insurances, and any other housekeeping details we need to be able to order the loan documents from the bank. When we have all this information, we'll issue to you our statement of advice, or mortgage recommendation it's often called. And this will have details of your original application where we went through your goals, plans and challenges, and it'll also confirm the exact loan details that we're intending to order from the bank on your behalf. And we just need your confirmation of this to ensure that we're all on the same page around the intended loan details. And with your confirmation, we can then go ahead and order the loan documents from the bank. This process can take a week or so, and they're usually issued at least a week prior to the settlement date so that you have time to meet with your solicitor for signing well before the settlement date.